We're very encouraged with our partner, 21 shares. I think we've crossed every T, dotted every I. We believe to the SEC's satisfaction. I think the messaging around the 29th is, look, if you're not going to be ready to go on or around, let's say, January 10th, then do not submit anything more to us because we have too much to do here. And again, that also is encouraging because it feels like a bit of that the SEC is setting a deadline for itself. So that's great.
We are now less than 2 weeks to a huge event that many believe will completely and permanently change the overall digital asset space in and out of the United States. This event is the potential approval of a spot Bitcoin exchange-traded fund by the U.S. Securities and Exchange Commission. According to Cathie Wood, the founder, CEO, and CIO of asset management firm ARK Invest, the January 10th deadline has much more importance than most people realize. Not only is it the final deadline for the SEC to announce its decision on whether it's approving or denying ARK Invest's ETF application, but it is also the deadline the SEC has set for itself. The commission is basically telling applicants to ensure they have everything ready by that date or forget about getting approved with other applicants. This is the SEC essentially telling everyone that we are getting a spot Bitcoin ETF on or before January 10th. Plus, by all indications, the regulator will be approving more than one spot Bitcoin application, which means firms like BlackRock, Fidelity, ARK Invest, VanEck, Bitwise, and others that have applied to launch Bitcoin-based spot ETFs and their very wealthy clients will soon be pumping tens or even hundreds of billions of dollars into Bitcoin and other top cryptocurrencies. According to Cathie, the chances of an approval by January 10th are now well over 95%. In a recent interview with CNBC television, the renowned hedge fund manager revealed some important details about Bitcoin ETFs and what such products will mean for the entire crypto space. Cathie believes this point will mark the beginning of an important and lucrative era for the industry. The era that moves us from only retail investors to becoming choice assets for wealthy institutional investors around the world. We will now bring you clips from Cathie's interview as she discusses important nuances applicants are ironing out with the SEC, increasing interest among institutional investors, and her outlook for the industry in 2024 and beyond. Please watch, share, and like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Biggest controversy, and this is in the press, but I'll highlight it because I think for most of us, it has been, wow, are they going to allow in-kind transactions? So, limiting the tax impact of transactions, or is it going to be primarily in cash? And I think, as has been reported widely, I think it's cash, not in kind, at least at the outset here. And I think there are just a few people within the SEC who are just somewhat concerned that banks will be forced to touch crypto. We're not sure they will be, but we're talking about something very technical. So to answer your question, yes, very technical. But that has been, I think, the big issue as we head hopefully towards a resolution. Well, I do think there will be repositioning for all kinds of reasons, but I do also believe that the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell it. You have a lot of anticipation, a price moves up. The event happens, and then especially fast trading organizations sell on the news. But beyond that, that I think will be just maybe a very short-term phenomenon. I think that the institutional push into Bitcoin will be quite significant to the price. In fact, in our price expectations going forward, the biggest contributor is institutions. As they move, they don't have to move very much in. They can move, there are trillions of dollars in assets to be allocated. If they just move in 0.1%, forget about 1%, but even 0.1 or 0.2%, that will move the needle, especially as we know, the number of Bitcoin outstanding right now is about 19.5 million. And the further that number, the furthest that number is going to go is 21 million. So the scarcity value as institutions move in will begin to move the price, we believe. As with any new ETF, it takes a while to educate investors, asset allocators, advisors about these new offerings. So slow as it goes, but the most important thing that's happening right now is, we're watching the plumbing, and the plumbing works. That's extremely important. 21 Shares is the largest pure play ETP crypto provider in the world with roughly $2 billion in assets. So that has been mostly in Europe. This is in the US now. And so we wanted to make sure the plumbing works, and it's working beautifully. And I do think that a spot Bitcoin ETF will stimulate, once institutions and other investors have a toehold into the space, they will want ways to diversify. And so we wanted to be ready with those 5 strategies to help with actively managed diversification strategies. Some are lower volatility, some are more diversified with digital asset equities. So again, we're trying to be, shall I say, a go-to for anyone thinking about investing in digital assets.
As Cathie has revealed, ARK plans to offer a suite of innovative crypto-based exchange-traded funds, starting with their spot Bitcoin ETF. While the SEC continues to stress over details like in-kind or cash creation, their counterparts around the world are much more receptive to the cryptocurrency industry. According to recent reports, Hong Kong's financial regulator has published rules for spot Bitcoin ETF issuers, allowing the use of both cash and in-kind creation models. Despite being thought of as more repressive of crypto, the Hong Kong Securities and Futures Commission is welcoming both models, while the SEC insists on the exclusive use of cash creation models for Bitcoin ETF applicants in the United States. During the interview, Cathie also discusses her firm's decision to sell off its GBTC holdings. On Thursday, Bloomberg analyst Eric Balchunas revealed that ARK Invest had liquidated its entire remaining Grayscale Bitcoin Trust, GBTC holdings worth $200 million. The investment firm used half of the money, about $100 million, from the sale of GBTC to invest in Bitcoin futures ETF BITO. Here's what Cathie has to say about the move.
Institutions don't want to bother with custodying and so forth. They want and tax issues and other infrastructure. They just want to be able to access quickly Bitcoin and other digital assets. We think longer term, and so if we're right, a spot Bitcoin ETF will be the most liquid way to access exposure to Bitcoin. And I think that liquidity and the ability to move in and out quickly is going to be important to institutions, because some institutions, yes, will be buy and hold. Others will use the ETF really as a way to play a new asset class. And they'll want exposure at times because the diversification increases risk per unit of, increases return per unit of risk. So I think they can't ignore it. And so this is a very good way to access it.
Looking at your activity at ARK Invest, you recently offloaded about $13 million worth of GBTC, so the Grayscale Bitcoin Trust. And I think you've been offloading for several weeks now, as well as $200 million worth of Coinbase shares. Tell me a little bit about the reasoning and the motive behind those trades.
Sure. Well, and this is portfolio management, essentially. So we've had both appreciate quite dramatically this year. This has been the best performing asset by far this year. And we always do take profits. It's just simple portfolio management on top of the actual price appreciation of Bitcoin. we've had the discount closing relative to NAV for GBTC. So that's been, a double impact in terms of appreciation. So it's just traditional portfolio management.
What else is on your mind in terms of what's driving the direction of Bitcoin over the next year?
Well, I think something happened this year that will continue to inform investor decisions. Bitcoin appreciated during the regional bank crisis. So as the KRE, the regional bank index, imploded and Silicon Valley Bank went under, Bitcoin appreciated in the middle of that crisis, roughly 50%. And so we have a new role for Bitcoin, and that is not only a risk-on asset, but a risk-off asset too. Think about that. And why is it? It is because Bitcoin, unlike our banking system, does not face counterparty risk. It is completely decentralized and transparent by wallet address, right? And so our on-chain analyst, David Puel, can watch the network all day long and see movement and spot unusual activity. And we certainly saw that last year as Celsius was going under and others. It was Bitcoin that didn't skip a beat. So I really think it's proved its mettle. And that is informing institutions. They may not have liked it at one point in time, but that regional bank crisis spoke volumes. Now, so we look at Bitcoin as a hedge also against both inflation and deflation. So think about that. We have a risk-on asset and a risk-off asset. It's a hedge against inflation, much like gold is, because its quantity is fixed out there. And then it's a hedge against deflation because of this notion of counterparty risk, not subject to it. So it's going to play a lot of roles in a lot of portfolios. And, our forecasts are over 5 years, and over a 5-year investment time horizon. We do think that it will, for some people, take the place of physical gold. So that's a big mover. We also, as I mentioned, institutions will start with 0.1, 0.2, maybe going to 5% if our analysis is correct. That's what usually happens with a new asset class. And then we have the emerging markets. If you noticed, El Salvador and now Argentina, both of the presidents of those countries are supporting Bitcoin. And why? Because they've watched themselves and their populations, their purchasing power and their wealth being destroyed by bad monetary and fiscal policies in those countries. And that's not just true of those two countries. It's true elsewhere in the world. So we would not be surprised to see Bitcoin become legal tender in many more emerging markets. That will be another very big use case. And then related to that somewhat is remittances. It's easy to transmit once people have wallets and understand how to do it. Bitcoin for little or no charge at all, whereas going through Western Union can cost 8%, 10%, 23% in Nigeria, of even $100 as families in the US try and transmit or remit funds back to their families in emerging markets.
During the interview, Cathie discusses the possibility of the SEC approving other crypto-based ETFs. According to the ARK Invest CEO, blockchain networks like Ethereum and Solana are very promising because they are smart contract networks. Cathie believes smart contracts are going to grow in importance as decentralized finance continues to develop momentum. She adds that both are winners and would do great things during the next crypto bull run and beyond. What are your thoughts on Cathie's interview? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? we're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of savvy finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.